Hello everybody and welcome to another amazing video of DIY investing. For today's video, we are going to be doing one of my favorite things, and that's analyzing every single one of our prior Bitcoin cycles, breaking them down by the time frames, understanding how long the accumulation actually took before we went into a new all-time high to begin that new cycle. I firmly believe that we are seeing a lot of the same correlations today, but a lot of people have been asking me, is this a left translation? Is this a right translated cycle? How are we going to be able to factor all that in and play the market long term? So for today's video, I'm going to break it down and explain exactly how I'm personally going to be investing into this market cycle and how you guys can look to get a lot of the same understanding that I do from the charts. If you guys find any value in this video, please do me a favor, hit that subscribe button. And if you want to see anything I'm investing in long term, links are in the description to go ahead and sign up on my website for my private group. When we're looking at this cycle, this is going to be the one outlier out of all of our bull runs. And the reason why is because Bitcoin's market cap basically right here was $2.5 million. So it was a micro cap crypto. There wasn't a lot of adoption. There was pretty much nothing besides speculation. So the amount of time that this one took to accumulate was much quicker than anything we had seen. From the cycle top to the point of us going into a new all-time high was only 630 days. So this is going to be the one cycle that is a complete outlier. And when we come into these other cycles, it'll make a little bit more sense as to what I'm talking about. So we're going to go to a 3-day time frame and we're going to zoom out here, and I'm just going to go through and analyze these cycles in a way that I think is going to make the most sense for the average person. We're going to start by the cycle top, and we're just going to draw a line every 365 days over. So our first year just would have been our bear market. And this is going to be something that you're going to notice over our cycles, is the fact that the bear market generally lasts 1 year. Now this one ended up making one more final kind of capitulation below, but we know that historically speaking, bear markets last 1 year, and then we historically have started that next cycle, even if it ends up being some type of an accumulation. Now, if we draw another data point 365 days over, this is going to be taking us to the completion of this accumulation and then kind of the first higher high of the new trend, right? Because it was in this move that we broke out of accumulation, flipped it as new support, and then started uptrending. So in 2017, this would have been, or 16 and 17, this would have been kind of like the longest cycle that we ever had. This one took more time to accumulate than anything we had ever seen up to this point. And I think a lot of that was really because of the upside we saw in the prior cycle before that one. This one took 630 days and then produced this big of a move into price discovery, and this one took a lot longer of a period of time to accumulate after such a big, blow off top. We go another 365 days over, and this is where we're going to be starting that move upwards of those all-time highs. But we can see that this was the move right here, and we're still kind of way below those prior all-time highs. We still have a little ways to go. But it took about 3 years inside of this cycle. Historically speaking, what we've seen is the cycles have taken about 3 years to accumulate from the point of us making an all-time high to the point of us actually going into a brand new all-time high. It's generally around that 3-year mark. Now this one, 3 years came, and then we started that 4th year, and we got all of our upside potential taking place just in that 1 calendar year. If we go 365 days over, you're pretty much looking flush at that cycle top over in here. So we noticed that in this cycle, it took about 4 years completed, which we know, 4-year cycles. We obviously have been following those. But even if we're just looking in yearly increments, it takes about 3 years worth of an accumulation. At the end of that 3rd year, the beginning of the 4th, that's where we see the real upside potential set into the cycle. The only real outlier of this would have been this first cycle, taking a much shorter period of time to get into that price discovery type move. But if we remove these drawing tools and we apply it even to the last cycle that we just went through, you're going to see a lot of the same sort of correlations here. We can go from the cycle top, draw a line, and every single year we'll draw a new line, 365 days over. Takes us to almost the exact bottom of that bear cycle. So once again, the bear markets lasted about a year. In 2015, it lasted like 50 days over a year, but this one was exactly 1 year, 365 days from the cycle top to the cycle bottom. Now, if we come and draw another data point, 365 days over, this is going to be taking us to the ending of the accumulation phase and kind of that first higher high. Similar to the 2017 cycle, but the upside that we saw to begin that bull run was a lot quicker. The accumulation was only 3 months, and then we saw a move all the way back up to the 618 fib, much bigger than anything we had ever seen up to that point. And so obviously the cycles are going to vary. The thing that I want you guys to be aware of is even though the price action might vary, even though that can look its own sort of thing each and every bull run, the time frames have historically stayed the same. If we come and draw another point, 365 days over, this is pretty much taking us right to the point of us making a new all-time high. So historically speaking, Bitcoin has followed these same sort of patterns where it takes about 3 years And once you're in the beginning of that year 4, that's where the real price discovery starts and the real upside into new all-time highs. But it wasn't that different in 2017. You know, this one took off a little bit quicker. It was at the end of that year 3, beginning of that year 4 that we were pretty much already right at new all-time highs, versus in 2016, you know, Bitcoin was still right over here at $750. So we still had a ways to go, but the majority of the accumulation was finished within 3 years, right? That's the vast majority of our cycle is just being concluded within this 3-year trend. And once we're at the end of that 3-year and into the beginning of 4, historically speaking, that's where Bitcoin has started to go into price discovery. So once again, you know, looking at those same rules and applying them to what we're seeing today, I think we can get a lot of the same conclusions. You know, we draw from the high, we go 365 days over from that point, and that's going to be giving us basically an exact bear market cycle from the cycle top to the cycle low. We made one candle a little bit lower, but once again, it's the same thing. 1 year long in the bear market, very much on par with the prior cycles. If we go another 365 days over, I would argue this one starts to look a little bit more like that 2017 cycle in ways, but it's happening a little bit quicker, I can't lie. You know, we can see that from year 2, we saw the accumulation, which, you know, even started inside of the bear market. That was the interesting thing about this last cycle, was in the bear market, you know, June, we had this bottoming formation that started. We held here for quite a few months, 5 or 6 months, that we just kind of consolidated here before the FTX collapse dropped us to that one more low. However, Ethereum, many other altcoins never made a lower low. Many of them held support, which tells me that people were more willing to buy into this bear market, earlier into the bear market, than they were historically speaking, because we saw much bigger capitulations to end that cycle, right? This was the end of the year capitulation. We saw a 50% drop off of that 6K support floor. If we come all the way back even into the cycle of 2016, we can see that it was pretty much just a big capitulation all the way to the very ending of that year. So it has been, historically speaking, very much the same, except for this last cycle. Even though we did see this final capitulation, it was much smaller. It barely made a lower low. This was more of a Wyckoff accumulation that really started, you know, all the way in the middle of that summer. So we saw something different. The accumulation started a little bit earlier than what we were accustomed to seeing. And so then we get into that year 2. That starts us in our first uptrend, first higher highs and higher lows. That's what we did here at 25K when we flipped that level as new support. And then we can see getting into that year 3 mark, this is where we're at today. And if we draw another line, go 365 days over, you know, we can see that we're a little bit ahead of pace, right? Because historically speaking, where we've been at, you know, it's been at the very ending of that year 3, all the way over in here, the beginning of year 4, that we've started to get that move into new all-time highs. But what we notice right here, we've already technically made a new all-time high. You know, we made a new all-time high. We finished year 1, we finished year 2, and it was in year 2 into the beginning of year 3, like year 2.5, that we kind of hit that new all-time high level. This is the quickest pace that Bitcoin has ever done this. We've never seen Bitcoin go into a new all-time high this quickly to begin a new cycle. And so this is why we get into something that's a little bit of an outlier. Now, I wouldn't say that we're that far off, right? We have front run a little bit. We have distanced ourselves from that normal trend, but we're not that far off from it, right? You know, historically speaking, Bitcoin would be going into a new all-time high somewhere right around this line, which we're not that far away, right? We have a few months of consolidation before we get there, but it's not like it's that big of a move. Regardless, whatever happens with this consolidation with Bitcoin, knowing that we're a little bit ahead of schedule, I think that we can still draw the same conclusions, that maybe we're just in a longer consolidation, right? Maybe this thing comes up here, fakes everybody out, we kind of consolidate, and then we start that move like this. This is a consolidation pattern I've talked a lot about, how we could very easily come all the way back down to this low end support at around 60K, kind of go sideways before that next leg up. I'm not going to be the least bit surprised to see this consolidation just continue to chop people out. However, I'm not as focused with that. My focus is always the long-term projection, understanding how the cycles work, because we know that as long as we're getting in here at the cycle lows and we're accumulating, all we want to really be doing is just holding our investments into that price discovery. I'm not trying to overtrade anything. Even if we saw a lower low, where Bitcoin maybe does something like this, makes one more big final flush before we get that next move, even if something like that were to happen, it doesn't change my perspective, because I've been invested into the cryptos I want to hold since all the way back down in here. You know, now that we're starting the cycle, the only thing we should really be doing is looking to capitalize on our long-term investments by holding. Now, if you're a trader and you're much more, and you feel like you're better positioned by being in and out, you know, do your best. That's, at the end of the day, everybody has their own plan. But for me, I get in based off of the 4-year cycles, right? We were accumulating all the way down here at the low point of the cycle, with the intention of holding 4 years. So now that the cycle's taken off, and because it's front running, I'm especially not trying to call tops, even if we saw a deeper correction that people could buy. I mean, I have assets I could sell and go into cash if I felt the need to buy more, but I've been in for 8 years. I've been all in on these markets. So me investing what I had left at the bottom is me being all in that I possibly can. And so when I'm analyzing these cycles and I'm seeing that, yeah, we're a little bit ahead of pace, does this mean we're going to see a correction before we get that next leg up, or are we going to continue to kind of lead this cycle and front run? I don't know for sure, guys, but we've been consolidating up here at these highs for a long time. I think that we're very close to getting that breakout. And if we did start to see that breakout and we started to get up here, maybe even right now, and we started front running like this, you know, we could be looking at something a little bit different than these prior cycles, where historically speaking, it's always been inside of that year 4 mark that we start getting into a new all-time high. But what if something like that shifts? And the only way that we're going to be able to know that is by simply zooming out and looking at the 4-year cycles, because that's really the only thing that we can look at to draw a strong conclusion on any of the way that the cycle is going to change. Because historically speaking, Bitcoin has only ever followed these 4-year cycles. So if we're going to continue to see these 4-year cycles, we have to continue to follow them. And we know historically speaking, every single cycle from cycle low to cycle low equals 4 years. 1428, 1428, 1450 is 4 years. So every one of our prior cycles have been exactly 4 years. We see a 3-year bull market to the cycle top, and we see a 1-year bear market to the cycle bottom every single time. Both of our last 2 cycles were exactly the same, from cycle low to cycle low to cycle low to cycle top. The time frames are 100% identical. You don't get that type of a correlation if there's not something, you know, tangible behind it. There's a reason why we follow and correlate to these cycles so much. And with us in this next cycle, we have to understand that inside of a normal 4-year trend, our 4-year cycle bottom is projected to be out here at like the end of October, the beginning of November of 2026. The end of 2026, I should say, not the beginning. We're looking at our next 4-year cycle being clearing the heck out in here. So what we're looking at now is a 3-year bull market or something along those lines. Historically speaking, like I drew over in here, from cycle low to cycle top, you know, you're looking at 3 years almost exactly. And that was how each of the last 2 cycles have worked out. So when we're looking at these, every one of our cycles have played out in the same ways. If we're looking at roughly the same thing playing out in this cycle, if we're going to go, you know, 1,064 days approximately, you're looking at like the end of 2025 as our cycle top. That's where we'd be looking at this next projected move. If Bitcoin was to follow this, we'd make this big, glorious move, and we'd probably finish somewhere around the end of 2025 before we started that 1-year bear market back down. And it would be something like this. Historically, this is the path that all of the prior cycles have followed, and this is just the most likely scenario if we continue to follow the same trend that we've been at. However, there's a possibility where this ends up being a little bit different. And the way that you would analyze that is based off of where the cycle top came. So if we notice that we have the cycle low and we have the cycle low, and then our entire cycle is this. From the beginning all the way to the cycle top to the end of the bear market. That's one cycle. The distance in between is 4 years. So whatever side of the mid-range point that this top's on, so what is half of 1450? Be 725. So we're going to be about right here. We're going to draw another line. We're going to make this one red. And we can see that historically speaking, this is the mid-range and the cycle top occurred on the right side. This is a right translated cycle. This is the only way that we can factor a variance inside of our normal trend. And this is why it's super important that you understand these, because every single cycle up to this point, when we're drawing our mid-range point, 725 days over, you're looking at every cycle being the same, where the cycle top is occurring on the right side of the mid-range. It's a right translated cycle. And what that means, whenever we have a right translation, it means that the most likely scenario is that we're going to follow another 4-year cycle. So this one was a right translated, and then what was the next cycle that happened? Well, it was a right translated cycle as well. Well, if this is a right translated, then we have to look at the very real potential that this next cycle that we're in right now is also going to follow the same rules. But it can have variance, right? It can always have variance. But if we're analyzing with these same time frames in mind, 725 days is going to be our mid-range of this cycle. So we're looking right here. We can see that where we're at right now is still on the left side of that mid-range, right? This was the left side of that mid-range, this entire portion of the cycle, right? That's where we're at. We're still on this left side. And so if we were to see the cycle actually top early, where we maybe make this quick impulse all the way up to like 150K, and we're on the left side of this mid-range, that would be a left translated cycle where we could actually see a longer sort of bear market. Instead of a year-long bear market like all of these have been, we would be topping early in the earlier portion of the trend, which would actually signal a longer bear market. Instead of 1 year, it'd be like 1.5 to 2 years long, leading into, the capitulation stays the same. The 4-year cycle always stays the same. The variance is where the cycle tops at, because we could actually have an early cycle top, or we could have a normal 3-year bull market like each of all of our last cycles have been. We don't know. The one thing that universally stays the same is where the 4-year cycle bottoms. Every 4 years, the cycle bottoms at the end of its bear market. That's the one universal thing that stays the same across the 4-year cycles. The thing that will begin to difference itself from that trend is where the cycle tops will occur. And because we have so much more momentum, so much more hype, institutional demand, retail is going to be here, we have to at least be aware of the potential where we top early. And then do actually start a left translated cycle. It'd be the inverse of all of our prior trends that we've been on, right? However, if we do follow your normal trend, we'd basically just be looking at Bitcoin once again topping at sometime the end of 2025, whatever, that is. And then we'd start that 1-year bear market, and we'd follow your very normal type of uptrend, your very normal bull run, 3 years up, 1 year down. And that's just your normal 4-year cycle. So this would be the most bullish scenario. We'd make the most money. The most upside potential would happen. In my opinion, it would behave kind of like that 2017 cycle that we saw. Consistent higher highs and higher lows and a big blow off top once we got into price discovery. We've seen a lot of the same sort of correlations here now that we're sitting at those prior all-time highs. Even if we get a further, couple months of consolidation here before we break out, it doesn't really change anything. The more consolidation that we have right at these all-time highs, the closer it is that we're going to get to this mid-range, right? The better it is if we top on the right side, if we start crossing onto the right side of this mid-range, we're looking at a right translated cycle, and that's going to follow your normal trend. That's what we want to see. That's going to give us the longest bull market possible. The most money can come into it. It would be like that 2017 trend. However, if this ends up being different and we do end up getting an early cycle top, maybe we end up running really quickly up here to 150K and actually top prematurely of that, we could be looking at a longer bear market. And I don't really know for sure what the scenario is because we haven't got there yet. But what I'm leaning towards is that this will be a normal 4-year cycle. And it just looks like it's going to be a more impulsive 4-year cycle. We're already sitting at here 1,000 days in at almost a new all-time high. It's a little bit earlier than prior cycles, but it's not that much that puts us at such a different trajectory. At the beginning of this cycle, when we first started breaking out with the ETF, we were in very real left translated territory. Like we could have easily seen a left translated cycle. But where we're at right now, 1,099 days, almost 1,000 days, we're fairly close. You're only a little bit away from being at those same time frames where, yeah, it's a little bit of a quicker pace, but I don't think it changes anything drastically. I do believe that we're leaning towards a normal 4-year trend. The difference being that this just ends up being more parabolic, more institutional development, adoption. Retail is going to be here to drive up prices because of the institutions. And I think it's going to be a lot more of a retail driven hype cycle as a whole. The only one we can really compare to is that 2017 trend. And we know that when we're looking at this, how parabolic these cycles can get in a truly hyped bull run and how small our last cycle was in comparison. I really do believe that this next cycle coming is going to be a lot more like that 2017 bull run. I'm going to keep you guys updated with the time frames, the targets, understanding if we're actually crossing that mid-range point at the threshold for a right translated cycle, because it's going to be very important for us to do that if we're going to see the normal trend play out. So anyways, guys, this is the video I had for you. Wanted to break things down, go over our cycles, explain everything that I think is the most important stuff to understand in your trading plan, because by understanding the cycles, it gives you a much better idea of how to play the bull runs, how they've differed, how they've stayed the same. Overall, we're pretty much on the same paths, a little bit quicker ahead of schedule, but it's not that much different that I'm really freaking out. So if you guys did find any value, please do me a favor, hit that subscribe button. If you guys want to see anything that I'm doing with my portfolio long-term, buying, selling, trading, when I take profits in this bull run, links are in the description. Go ahead and sign up on my website to get access to my private group. Everything I do with my money is posted in there. I'd love to have you guys a part of it because we're getting ready for some very bullish markets. And honestly, I think that this is going to be the best cycle that we could ever be a part of trading. So I look forward to having you guys in there. And with that being said, I look forward to just seeing you guys profit and win this whole cycle. Thank you guys so much for tuning in. I'll catch you guys in the next one. As always, peace out.